Most traders think they need a better strategy. They spend weeks scrolling through YouTube, buying courses, jumping from one system to the next. And every time a trade goes wrong, they convince themselves, maybe it's the strategy, maybe I need something else. But here's what nobody is telling you. The real shift, the one that actually changes your results, your mindset, your execution, it doesn't happen because you found a better entry. It happens after something most traders never reach. 20 consistent trades. Just 20. And once you hit that number, really hit it, with discipline, with rules, with full commitment, everything changes. The way you feel before a trade, the way you react when you lose, the speed at which you execute, the voice inside your head that used to second guess every single click, all of it changes. Today, I'm going to show you exactly why, so stay with me. This one matters. Let's start with the honest truth. Most traders are stuck in a loop, and it's not the loop they think they're in. They think they're stuck because of bad luck, or the market, or because they haven't found the right strategy yet. But the real loop, the one quietly destroying their progress, is this. They take 5 trades, maybe 8, maybe 10 if they're patient. And then something goes wrong. A few losses in a row, a moment of doubt, and they reset. New strategy, new rules, new energy. And then the whole cycle begins again. Here's the brutal reality. You are not giving anything enough time to actually work. Think about it this way. If you went to the gym, did 10 workouts, didn't see visible results, and then quit and switched to a completely different fitness program over and over again, would you ever get fit? Of course not, because you never gave your body enough time to adapt. Trading is identical, and in some ways, even harder, because in trading, the early losses feel like evidence that something is broken, when in reality, those early losses are just the cost of learning. They're not a signal to quit. They're a signal to stay. The market has this cruel quality to it. It punishes inconsistency before it rewards skill. That means if you keep switching strategies every 5 or 10 trades, the market will keep taking your money. Not because your ideas are bad, but because you never stayed long enough for the edge to show up. Edges only reveal themselves over large sample sizes. 10 trades tells you almost nothing. 20 starts to tell you something. 100 tells you a real story. But most traders never even reach 20. Not 20 truly consistent trades, because they keep resetting the clock. And that phrase, resetting the clock, I want you to sit with that. Every time you abandon a strategy before it's had a fair run, every time you change your position size mid-experiment, every time you skip a valid setup because last time it failed, you are resetting the clock, starting back at 0. You're not losing because your strategy is wrong. You're losing because you keep resetting the clock. Before we go further, I need to define what I mean by consistent trades, because this word gets thrown around constantly. Be consistent, be disciplined, but nobody ever breaks down what it actually looks like. Consistent does not mean 20 winning trades. I'll say that again because it's critical. Consistent does not mean 20 winning trades. I am not asking you to win 20 trades in a row. That's not consistency. That's luck chasing. What I'm asking for is 20 trades where you followed your rules. Same setup, same risk percentage, same time frame, same entry criteria, every single time. Win or lose. Here's a concrete example. Let's say your approach involves a specific pattern, a consolidation near a key level, and you enter when price breaks out with momentum. Consistent means you take every valid instance of that setup for the next 20 trades without deviation. You don't skip it because you had a rough week. You don't add more size because you're feeling confident. You don't cut the trade early because you're nervous. You follow the plan every single time. And yes, some of those 20 trades will be losers. That's not just okay, it's expected. Losing trades that follow your rules are not failures. They are data. They are exactly what you need. This is the part most traders find psychologically impossible to accept. We are wired to associate outcomes with quality. If something produces a bad result, we instinctively believe it was a bad decision. But in trading, that logic doesn't hold. A perfectly executed trade following every rule can still be a loser, and a sloppy, rule-breaking trade can accidentally win. The outcome of a single trade tells you almost nothing about your decision quality. Only a series of consistent trades can reveal that picture. So the question shifts. It's no longer, did I make money on this trade? It becomes, did I follow my rules on this trade? Yes or no? That's the only scorecard that matters right now. And the day you genuinely start measuring success that way, instead of in dollars and cents, is the day your psychology begins to change. Because now you are in control of the outcome. You can't control whether the market moves in your direction, but you can absolutely control whether you followed your rules. Consistency is the input. Profit is the output. Most people chase the output and skip the input entirely. It has never worked that way. You have to earn consistency first, then the profits follow. Now we're going somewhere most trading content never goes. What actually happens inside your brain when you trade, and why everything shifts after 20 consistent trades from a psychological standpoint. Understanding this changed everything for me. Before you've built a meaningful sample of consistent trades, your brain is flying blind. It has no real reference point, no database of what this setup feels like in live conditions. How price moves before your entry, the volatility you'll experience while in the trade, the emotional texture of holding through a drawdown. Without that lived experience, your brain does what it always does when it lacks information. It pattern matches to everything else it knows. Fear, past losses, that one trade that went catastrophically wrong. And it uses all of that to generate the signal we call hesitation. That hesitation right before a valid setup, it's not wisdom. It's not your intuition protecting you. It's a nervous system that hasn't been trained yet. It doesn't trust the process because it hasn't seen the process work enough times to know what working actually looks like. Here's what changes after 20 consistent trades. Your subconscious starts to build what I call a reference library. Every trade you take, consistently, by the rules, gets stored as a data point. Your brain, which is an incredibly sophisticated pattern recognition machine, starts recognizing the shape of your setup. It gets familiar with how price behaves in this context, with what a normal pullback looks like versus a real reversal. And it starts to build something you cannot buy, cannot copy from someone else, and cannot fake. Genuine, evidence-based confidence. Before 20 trades, your confidence is borrowed. It comes from someone else's back-tested results you didn't live through. A YouTube comment saying, "This works great." That borrowed confidence is fragile. The moment the market pushes against you, it collapses, because it was never really yours. But after 20 consistent trades, 20 real, live, rule-following trades, your confidence comes from a completely different place. It comes from memory, from experience, from personally seeing this setup play out multiple times in real conditions. Your brain has evidence now, and evidence is what your brain actually needs before it will trust you. There's a concept in neuroscience. Neurons that fire together, wire together. In simple terms, every time you repeat a behavior in the same context, the neural pathway for that behavior gets stronger, more automatic. This is how habits form, not through willpower, but through repetition in context. Every time you see your setup and execute correctly, without hesitation, without changing the plan, you strengthen that neural pathway. You are literally rewiring your brain to be a more disciplined trader. But this only works if the input is consistent. If you're taking different setups, changing rules, switching time frames, you're not building one strong pathway. You're building 20 weak ones, none of them reliable. After 20 consistent trades, your relationship with uncertainty also changes. Before, uncertainty feels threatening. Your brain interprets, "I don't know if this will work," as danger. Maybe don't do it. But after 20 consistent trades, your brain has seen uncertainty resolved enough times to stop treating it as a threat. It becomes neutral. A variable that exists in every trade doesn't make the trade wrong and doesn't require an emotional response. That shift from uncertainty as threat to uncertainty as normal is one of the most powerful psychological evolutions a trader can experience, and it cannot be taught. It can only be lived through. Your brain needs evidence before it gives you confidence. 20 trades is that evidence. When I say everything changes after 20 consistent trades, I don't mean that vaguely. There are 3 very concrete things that shift, and I want to walk through each one because these are things you will actually feel. The first thing that changes is your relationship with losing. Before 20 consistent trades, a loss is an event. It carries emotional weight. 3 losses in a row can shake your belief in your entire approach. I know this because I've felt it. There was a period in my trading when I genuinely couldn't sleep after a losing day. I'd lie in bed replaying the trade. What did I miss? What did I do wrong? What does this mean about me? That kind of response is exhausting, and it makes it impossible to trade clearly the next morning. But after 20 consistent trades where you followed your rules every time, losses start to feel different. They stop feeling like failures. They become data points. Because when you've been consistent, you know something crucial. You did your job. You followed the rules. The loss wasn't caused by a mistake. It was simply the market moving differently than expected. And you now know, from having seen 20 trades play out, that any single loss means nothing about the quality of your overall approach. That understanding doesn't come from knowing it intellectually. It comes from having lived through enough trades to feel it in your gut. And when you feel it, losses genuinely stop hurting the same way. The second thing that changes is your execution speed. Not that you click faster, though that can happen, but the hesitation disappears. The mental lag between seeing a valid setup and actually pulling the trigger shrinks dramatically. Before 20 consistent trades, execution involves an internal negotiation. Your rules say, take the trade. Your emotions say, but what if this is the one that loses? And you sit there, sometimes for agonizing minutes, trying to resolve that conflict. Often, you take the trade late, miss it, or enter at a worse price. That missed trade makes you feel worse, which makes you more hesitant on the next one. A feedback loop of poor execution. After 20 consistent trades, your nervous system has seen this setup enough times that the hesitation mechanism weakens. Your brain recognizes the pattern. It's been here before. It knows what to do. I remember the first time I noticed this in myself. I entered a trade before I'd consciously finished analyzing it. My hands moved before my brain caught up. My first reaction was almost alarm, but when I reviewed it, I'd followed every rule perfectly. My subconscious had done the work. That's what 20 consistent trades can build. The third thing that changes And this might be the most important, is your self-trust. Before 20 consistent trades, most traders are addicted to external validation. They post on forums asking, "Does this setup look valid?" They join signal channels. They wait for a video to confirm what they already see. They look to other traders for permission to trust their own analysis. And the problem isn't just that this is inefficient, it's that it actively prevents you from developing internal authority. Every time you outsource your decision to someone else, you send yourself a message: "I don't trust my own judgment." Repeated often enough, that becomes your identity. After 20 consistent trades, this quietly shifts. You stop looking outside yourself for validation, not because you become arrogant, but because you have a track record. Small, yes, but real. 20 trades you executed by your own rules. You saw what worked and what didn't. And that personal track record gives you something no guru, no signal service, no forum post can provide: a reason to trust yourself. I want to be honest here. There was a period when I was genuinely addicted to a signals group, checking my phone every 30 minutes for the next alert. And it wasn't really about the trades. It was about not trusting myself to find them. I had a perfectly solid approach in front of me. I'd just never given it 20 consistent trades. The moment I finally committed, truly committed, no changes, no external validation, I started to see myself differently as a trader. Not because I suddenly won every trade, but because I proved to myself I could be disciplined. That realization was worth more than any single winning trade. Now let's talk about how. Knowing that 20 consistent trades will change your psychology is useful, but without a system for actually doing it, for tracking, staying accountable, staying consistent, this stays theoretical. The most important tool is a trade journal. I know that word makes some traders roll their eyes. They think it's busy work for beginners. But some of the most disciplined traders I've spoken to are obsessive journalers. Not to track P&L, but because the journal forces a level of self-awareness you simply cannot build without it. Here's what your journal needs for these 20 trades. Just 5 things per trade. First, the entry reason. 1 or 2 sentences. Why did you take this trade? What matched your setup? Keep it plain and simple. Second, your emotional state before the trade. Were you calm? Anxious? Coming off a loss and trying to make it back? Just be honest. No one else is reading this. Third, the outcome in R, meaning risk multiples, not dollars. Did you make 1 R? Lose half? This normalizes results across trades. Fourth, rule compliance, yes or no. This is your primary scorecard, not whether you won, whether you followed the rules. Fifth, 1 observation. Anything you noticed about price behavior or your own emotions. 1 sentence. That's the whole journal. Entry reason, emotional state, outcome in R, rule compliance, 1 observation. 5 things, 3 to 5 minutes per trade. And what this does, even before you analyze anything, is it makes your trading real. It externalizes your process, takes all those internal experiences that normally float around in your head and puts them on paper where you can actually see them. After 20 trades, you'll have something genuinely valuable. You might find your rule compliance was lower than you thought, maybe 14 out of 20, not 20. You might see that trades taken when you noted feeling impatient were consistently your worst executions. These patterns exist whether you log or not. Without the journal, they stay invisible, and invisible patterns cannot be changed. The goal right now is not deep analytics, not win rates or expectancy calculations. That comes later with more data. The goal right now is purely awareness, to see yourself trading, to hold yourself accountable to the one rule that matters above everything else at this stage. Did I follow my plan today? You can't build consistency you can't see. Start logging. Keep it simple enough that you'll actually do it. A notes app works. A paper notebook works. The medium doesn't matter. What matters is doing it. Every single trade. All 20. No exceptions. Here's where we land. You came into this video maybe thinking you needed a better strategy, better information, access to something you didn't have. And I hope by now you can see that none of those things are the real constraint. The real constraint is the 20 consistent trades you haven't completed yet. The clock you keep resetting. The process you keep abandoning before it has a chance to prove itself. Everything changes after 20 consistent trades. Your relationship with losing changes. Losses become data, not disasters. Your execution changes. Your body learns to act without the hesitation that's been costing you entries and confidence. And your self-trust changes. You stop needing external permission to trust what you see, because you've built a track record that earns you real confidence. These are not small changes. These are the changes that separate traders who struggle indefinitely from traders who actually break through. So here is your challenge, a genuine challenge, not a suggestion. Don't change your strategy for the next 20 trades. Whatever setup you're currently working with, commit to it. Follow your rules exactly. Log every single trade. And at the end of 20 trades, come back here and tell me in the comments what changed. What shifted in how you feel before you pull the trigger? What shifted in how you respond to losses? What shifted in how much you trust yourself? I want to hear your story, because every trader who actually completes those 20 consistent trades has a story worth telling. If you want to see the exact trade journal format I use, the one I just walked you through, I've broken it down in detail in my next video with a template you can copy immediately. Link is right at the end of this video. It'll take you 5 minutes to set up, and it might be the most useful 5 minutes you spend in trading this month. And if this video reframed the way you think about consistency and process, if something genuinely shifted for you, hit the like button right now. It helps this channel reach more traders who are stuck in that loop we talked about at the beginning. And if you want more content that goes deep into trading psychology, not just mechanics, subscribe to Mind Over Markets. That's exactly what we do here, every single week. Thank you for watching. Now go take those 20 trades. Follow your rules. Log everything. Stop resetting the clock. Start building. The market is waiting to show you what real consistency actually produces. Go find out.